Bro, okay? Large cap tech. When it goes up, you don't buy it. And then when it dips, you buy the dip. And then it goes right back up, bro. Welcome back to Strongman Personal Finance. So Amazon just announced their earnings, and the stunk is up 7.11% after hours to rest at 170. Now we're almost approaching all-time highs for Amazon. Almost. I think its all-time high was what, $185.97 per share. So Amazon has had pretty good earnings apparently because the stunk went up. We're going to find out how good very soon. So, Amazon has announced their financial results for its fourth quarter ended December 31st, 2023. Net sales increased 14% to $170 billion of sales. That is a pretty significant increase. If you look at their prior revenue, what was their peak revenue? Their peak revenue for a quarter was 149 before this earnings. So they're still pretty insanely growing their revenue. 14% year over year. That's a pretty good increase. I'm not going to crap on that, okay? North America segment sales increased 13%. This is still the vast majority of their freaking sales, $105 billion. International, bro, actually had the most increase at 17% to $40 billion. And then AWS increased 13%. Now, I always heard that AWS made all the money in Amazon, and that was the value of Amazon, was AWS. But funny enough, you look at their operating income. This is their profit before interest and taxes. Their North America segment, what you think of as Amazon, had a profit of $6.5 billion compared to an operating loss of $0.2 billion. So they had a $6.7 billion swing in profit in a freaking year. Pretty crazy. International, bro, on top of having good revenue growth, actually the best out of all the segments, still posted an operating loss, but a much smaller loss. Okay, they lost $400 billion on the accrual basis of account, $400 million, excuse me, compared to $2.2 billion in the fourth quarter of 2022. Can you see why Amazon stock went down a lot last year? They lost $0.2 billion in North America. Now they're making $6.5 billion. They lost $2.2 billion in international, and now they only lost $0.4 billion. AWS has also massively increased their operating revenue, almost 50%. Not quite, but pretty significantly to $7.2 billion. So AWS still makes the majority of the profits, but the Amazon, what you think of as Amazon, actually has pretty good profits as well. Like it actually contributes to the freaking company's total value instead of just losing money and basically financing AWS. Net income increased to $10.6 billion. This is the profit on the accrual basis of accounting, or $1 per share. So you get $1 of income for $170 of stunk every quarter. What's the forward PE? 45. Okay, so that's a lot lower than what it used to be. Okay, so they go over the full year. Obviously, they've had a pretty incredible quarter, and the full year is going to look pretty good as well. So let's see what else. Operating cash flow increased 82% to $84.9 billion for the trailing 12 months. That's pretty crazy compared to $46.8 billion. Almost a double in operating income or operating cash flow. Free cash flow improved to an inflow. So they had positive operating cash flow or free cash flow instead of negative free cash flow. Why is that? Because they had huge capital expenditures. Let's see. Let's go look at how crazy they were investing in capital expenditures here. So they were spending a ton of money on investments. Okay, they went absolutely bananas in spending money on building new warehouses, whatever else they're freaking building. Okay, and with tight operating cash flows last year and a lot of capital expenditures, they had negative free cash flow. Now they have much stronger operating cash flow. And I don't know, I guess they're spending a little bit less, so they have positive free cash flow. Okay? So, let's see. What are they doing here? Well, they had a Black Friday and Cyber Mondays. They have fast delivery. They partner with Hyundai to innovate new experiences. Amazon will launch online vehicle sales in the U.S., starting with Hyundai. Oh, that's cool. But I thought only Tesla did that. They announced that Prime members in the U.S. can now add health care from One Medical to their Prime membership for $9 per month and include up to 5 additional family members for $6 per month each, making it easier for Prime members to get high-quality primary care. I need to look into that. Expanded Amazon Fresh grocery delivery, added 3-buy with Prime shopping benefits for Prime members, including the ability for customers to view, track, and manage orders from participating retailers in their Amazon account. So we can see they're doing a lot of cool crap. They announced that Prime Air drone deliveries will expand to Italy, the UK, and additional locations in the US in late 2024. There's a lot of cool stuff going on here. Let's see. Oh, football. What else? They released 16 films. This company does freaking everything. It's pretty funny. They release films and series on Amazon Prime. They do have some good shows on there. I mean, they get a lot of crap for, what was that one show? They got crap for Wheel of Time. They got crap for Lord of the Rings. But you know what? I enjoyed them. Okay. Let's see. Sports, AWS, blah, blah, blah. So basically they're fluffing themselves here. So overall, these were pretty good earnings. So they swang from losing a bunch of money last year to making a bunch of money. Let's look at the guidance. Net sales for the first quarter of 2024 are expected to be between $138 billion and $143 billion, or to grow between 8 to 13% with compared to the first quarter of 2023. So they're still growing their revenues. I mean, it's not like a 20x stock, okay? But they're still growing their revenues, which is pretty incredible for the size of the company. Operating income is expected between $8 billion and $12 billion. So they expect their operating margin, let's say on the low end, is going to be 5.7%, and on the high end, it's going to be 8.36%. Okay, so if we look at historical operating margin, let's see here. So their margins have expanded. So if you look at the history of their margins, you can see they increased over time. In 2013, they were barely profitable on an operating standpoint. They reached a peak in operating margins, it looks like in 2021 during the cloud market. Then they had a massive collapse in operating margins, and now they're basically recovering to where they were before. So that's good. Okay, looks like Amazon has come back from the dead. Very interesting. This guidance assumes, amongst other things, no additional business acquisitions, restructurings, or legal settlements. Just predict it, bro. It's easy. So they're this is the statement of cash flows. So we can see operating cash flows up massively. I mean, there's nothing really new here. We know they're still investing in property, plant, and equipment. Let's see, what else? What do they do? Borrowed some money, paid some money back. Yeah, nothing really exciting on this statement of cash flows. Let's see. Okay, product sales, revenue. So you can see their net services are what's really driving revenue growth, not really product sales. Product sales are up, 10%? But then you look at service sales, they're up way more than that. Okay, let's see, blah, 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 blah. Try to see if there's anything crazy on here. Yeah, most of their expenses are up. I mean, they cut a little bit in general and admin and sales and marketing, but overall their expenses are growing with their revenues, which is normal. Let's see, interest income, blah, 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 blah. Let's see some of their segments, okay? So we already covered North America is profitable, international is approaching profitability, and AWS is also, we know, is profitable as well. The biggest change being the massive swing in profitability in North America. Let's see. Let's see. I thought they had here we go. Okay. So here's some a more disaggregated look at their sales. So we can see online stores grew 9%. Physical stores, wow. What is that stupid store called that's expensive? It's a freaking ripoff. Only rich douchebags go to it. Their sales are up 4%. Third-party sellers revenue is up 20%. Advertising is up 27%. That's another high-margin business segment they're getting into. Subscriptions are up 14%. Basically, everything looks good. You know, what is there to hate? Stunk-based compensation. Stunk-based compensation has basically kept up with revenue growth. Incredible. Okay, let's see. So yeah, I mean, pretty good earnings. You know, how much Amazon's in VT? I don't know, like 1%. So I could celebrate with you guys. My wealth has increased by probably a couple $100 from this earnings announcement. I'm very happy and satisfied with Amazon. Okay, remember, when large cap tech dips, you buy the dip, and it always goes back at a 60-degree angle. Okay, have a wonderful night. Cheers.